Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly go over the latest earnings report of Power Corporation of Canada, which holds economic interest in insurance, retirement, wealth management, and investment businesses, and is the holding company of Wealthsimple, which is a stockbroker that a lot of Canadians use every day for investing and trading stocks and crypto. I analyzed their stock in detail in a separate video on this channel, and I will leave a link to that video in the description box below. Currently, I own 100 shares of Power Corp in my TFSA, and I'm down close to 12% on this position so far. The company reported their earnings on Friday after market closing bell, and I think this is a disaster in terms of the numbers. Honestly, I'm surprised that the stock is only down 1.5% after reporting these terrible numbers. I think most of the shareholders of Power Corp really don't care about quarter-over-quarter results, which is actually pretty good. It means probably a majority of the shareholders are long-term investors. But still, I'm a little bit shocked that the market reaction was not that bad after this terrible earnings report. This is going to be a short and quick video. Let's first review their two important earnings report highlights. Net earnings were $527 million, or $0.78 per share for the second quarter of 2022, compared with $994 million or $1.47 per share in 2021. This is a sharp decline in the earnings of the company in just 1 year, which is definitely concerning. Adjusted net asset value or NAV per share was $41.49 in June 2022, compared with $52.60 at December 31st, 2021. So basically, this is also a terrible number. Again, very concerning numbers. NAV reduced significantly this year. However, if we look closely at the individual sectors of the business in this quarter, we can understand what is going on and why their earnings numbers are down this much. Across the board, the numbers are not good. There is no way that I can say these numbers are good. They made a little bit more money on corporate operations, and they bought back the shares of the company, which are the only positive numbers in this report. Lifeco and China AMC actually reported pretty much the same numbers as 2021, so they are technically flat in terms of their adjusted earnings. But earnings of IGM, GBL, and standalone businesses and also publicly traded businesses are down huge this year. Basically, the publicly traded businesses like IGM, GBL, and Lifeco collectively lost 20% of their earnings this year, which is terrible. Now, if we look at the standalone businesses, we also see decline in net asset value and earnings across the board. Particularly, we can see the valuation of Wealthsimple reduced by more than 50% from $2.1 billion to $0.9 billion. So, most of the Power Corp businesses heavily underperformed and caused this decline in overall earnings per share and net asset value of the company. While this quarter was disappointing and of course changed the valuation of the company and the stock for me, I still want to hold this stock and allow management some time to reflect on these numbers and hopefully come up with strategies to stop earnings drop in these businesses. I still believe in the management team on Power Corp and will probably look to even double down on my position if the shares of Power Corporation drops below $30 per share. Probably not here, but under $30 per share, I will look to probably double down on my position. There you are, guys. I hope you enjoyed the video. If you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will wait for my other Canadian companies' earnings report to hopefully cover those as well. But until that time, I see you guys in the next video. Farewell.